should be online here. Pack that up. Someone can post the YouTube link. It'd be appreciated. And it's almost 4:12, so I'm going to get started. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. Okay. All right. So there's a good amount of stuff to talk about here. I guess let's just start the way we normally start, and I'll kind of get into some of the things I want to talk about here. So Spies gave a fantastic-looking retracement hammer doji today. It closed down 0.15%. Does anyone know what percent we were down at our lows? I don't remember. For Spies, I know Q's it was a solid like 2.5% or something like that at one point, but I'm not sure what we were down at lows. We were down a ton. Speaking of Q's, yeah, look at the snapback in the Q's. Lows today in the Q's are 369 just about. We closed above 380. We closed green today in the NASDAQ. We were so smoked at one point today. It was kind of crazy, and for us to close positive today by this, certainly doesn't look like much. If oh, thanks, Jerry. If you just I don't know, watch the news for headlines or something, and you saw, oh, NASDAQ closed up 0.09% on the day, you would think that it was just a boring day on Wall Street. It was crazy. The extent of this move was absolutely insane. That was the Qs. And finally, the Russell here also closing with a heck of a tail. Russell closed down 0.4%, so the IWM was still negative today, but with a heck of a tail. And a lot of stocks had some serious tails today. We can look at individual stocks in a second. But I want to start by talking about a few things that relate to positioning and probability and how we're trying to position ourselves and what type of game plan that we're trying to come up with every day in the morning meeting. Because I think it's really important to talk about, especially on a day like today. So we analyze our technicals, right? We analyze the big picture on things. Pat's note is also really important to me, and I want to bring up Pat's note and look at the indicators again that he posts in there, and I want to chat about them a little bit. So first of all, everyone should read Pat's note every day. It is phenomenal. You want to learn about markets, big picture, how things work. Pat's note is phenomenal. He gives his technical analysis take. He's got this graphic in here with the upgrades and downgrades every day. I mean, this is huge. This chart I thought was particularly interesting of valuations, which we know have had an insane move since COVID, now where they are versus their historical averages for software companies and for internet companies. So just a bunch of really great stuff in here. But one of the things I want to talk about, which I look at every day, it's a big part of my kind of big picture thinking and game planning, is these kind of tactical sentiment indicators. So the first thing you want to take note of, so if it's in the red, that basically means that the market is based on sentiment in a sell category. If it's in the green here, it's in a buy category. So it's a what's the word that I was Googling the definition of the other day? It's like a counter trend. It's not the word I'm looking for. Indicator here, right? So when sentiment gets really bad, that's when you want to be a buyer. When sentiment is really bullish, you want to be a seller, right? So, and this is based on closing prices. So this is the closing print on Friday, right? The closing print on Friday would have the market just outside of the buy territory, okay? And the first thing I want to say here is that just because the market is in the buy territory on a short-term tactical sentiment indicator does not mean that you should buy, And just because it's in the sell zone does not mean that you should sell. This is an additional layer of probability. Contrarian. Yes, contrarian. It's a contrarian indicator. This is a layer of probability when we're thinking about our big picture game plan, just like a lot of other things are, okay? A market that is oversold, especially if there's really bad news. Note there was no new big picture news this morning, but especially if there's really bad news, something that is oversold can just get worse and worse and worse and worse. I would love to see, because I don't remember it off the top of my head, I would love to see what this short-term tactical sentiment indicator looked like during the COVID crash in 2020, right? I'm sure it was in the green, and it got deeper in the green, and it just stayed in the green, and that's kind of, and if you were buying too early, I'm sure the first time it touched the green, if you were kind of buying just because of this, it probably was not a good move. You probably lost a lot of money. But it's an additional layer of probability. And we've had a lot of these days in the past where the market is closed kind of almost in the green, but it's not quite there. But then the next day, the market's actually down. So this not closing in the green territory, that's based on Friday. Then we gapped it down this morning. The gap down itself would probably have this in the green based on where we opened. And we all know that the market still sold off a lot off of the opening print before it formed its actual low, okay? But we've had this experience in the past where it's not quite in the green, it's almost in the green, and then shortly thereafter, bam, we're in the green. And then he also posts the medium-term sentiment indicator. S&P as of Friday's close is very neutral. It's kind of at the midpoint. But the NASDAQ, which we know has been relatively weak, is getting down there. And again, this doesn't include today's gap down. And I'm sure that if you could make this intraday somehow, that at lows today, this would clearly also have kind of been in the buy zone. And then finally, they call it a sentiment indicator here, but it's actually a positioning indicator from Goldman, so I don't know why it says the word sentiment in there, but it's based on positioning. And it's similar, when this is kind of above this dotted line, and there could be a second dotted line here at like 1.5%, I'm sure, that would show that it's like very stretched. That would tell you one thing. Again, it's contrarian here, where you could be looking to sell, and then as this gets down here, it looks to be a buy. Now, when we have these indicators get into their buy zone, it doesn't mean that the market is to go up. First of all, we just talked about how the market could still go down, but there's a couple ways in which this can be satisfied. Time and price. It's just another way of measuring exactly what I look at in the technicals of charts, which is where the market is trading in relation to the 8 and 21 EMA. It just kind of shows it to you in a little bit of a different way. It kind of shows it to you in terms of sentiment. But if the market was in like that green zone, which you think means buy, but then went sideways for 3 days, that's going to do the same thing as what would happen in a chart, right? So if the market goes sideways, that's going to come out of the buy zone as a time correction. If the market is extended to the downside and then goes sideways, it's going to become less extended because the moving averages are going to catch up, right? It's telling us the exact same thing. But the biggest point I want to make, because someone was like asking me this morning at almost like 10 a.m. why I wasn't shorting stuff. And I did say in the morning meeting that you could look for short-term shorts. So I just really want to explain kind of the thought process, and I think it extends to your guys' thought process as well. If I'm seeing this short-term sentiment indicator in the green, or I'm seeing a market, in the way that I like to look at it, very oversold to the downside, it doesn't mean close my eyes and hit the buy button. What it does mean to me is not to short. And the opposite's in the exact same way, right? If this was in the red zone here, or same thing, I'm sure my charts are going to be telling me the same thing, market's very extended to the upside, it doesn't tell me that I should be blindly shorting things. It tells me that I can't buy. So basically, for me, if I see this in the green, I can't short sell. If I see this in the red, I can't buy. We're too extended. And it's just another way of looking at it. So the more information that we can kind of pull together when we're creating our big picture game plan, the better. So what I'm looking at pre-market this morning, and this is a big part of my research, I'm looking at all Pat stuff, and I'm looking at the way that I view technicals, which is where the market is trading compared to the space that I consider equilibrium zone, which is a space between 8 and 21 EMA. So I'm looking at SPYs. I'm particularly looking at Qs. You know, Qs opened up at like 375 this morning. So Qs were really in an interesting spot. Because on the one hand, they're extremely oversold. On the other hand, you're potentially looking at a breakaway gap to the downside of the NASDAQ, which is very bearish. And I was also looking at like AMD I brought up in the morning meeting, opening below 130. I'm like, on the one hand, I got AMD getting pretty extended to the downside. On the other hand, it's a breakaway gap to the downside. And I think I literally said in the morning meeting, I would love to see AMD like have a capitulation move into 125 and then close above 130 today. That would be just like a really bullish signal if that could occur. And look at that. It's pretty much exactly what happened there. NVIDIA, I said the exact same thing about 270. If it can recapture 270, that's important, right? So yes, to go back to the Qs here, I'm looking at a breakaway gap to the downside of the NASDAQ, right? The support zone is between 377 and 380. I spoke about it a couple of times last week. We held 380 a couple of times perfectly, or I guess one time perfectly on Thursday, and then we still held the zone on Friday, and we, as a team, like picked the low of the day like perfectly both days, by the way, for some great day trades. Today I'm looking at the market gapping down to 375, and I'm like, holy cow, this is a potential breakaway gap to the downside. First thing I want to ask myself, are the other indices confirming it? And by the way, a NASDAQ close below 377 would put the NASDAQ into what I consider to be bearish territory. Whereas the SPYs are still clearly in neutral territory, and the IWM is in neutral territory as long as it's staying above the 207 to 210 support area. So I don't have confirmation from the other indices, but we do know that the NASDAQ is relatively weak. We do know that things are really oversold. This makes for a really tricky open, right? One, because yeah, you know, we're oversold, but we're not so oversold that we can't continue to go lower. And there's no such thing as being so oversold that you can't continue to go lower, but particularly here, right? We know, if I were to go back to the sentiment indicator, we know that on Friday it closed just outside the buy zone. So by today's open, it's probably in the buy zone, but still easily could see some selling. And that's kind of where the thought process came in, where I said this morning, like if you're looking at an AMD, I think you could, it depends on your time frame. This is literally exactly what I said in the morning meeting. It depends on your time frame. If you have a very short time frame, you could probably short the open in AMD versus 130 for a momentum downside move. If you have a bigger time frame, then you actually want to be looking to see if AMD can trade back above and close back above 130, and that could actually be some sort of, I hate the word bottoming signal, but I'm just going to use it here. That could be some sort of bottoming signal where you could get great longer term stock if you're buying AMD back through 130. So it makes this morning's open really difficult because we're juggling this multi-thought process. So when all is said and done, what does this NASDAQ gap do? What is a breakaway gap to the downside? What does that signal? Anyone who is trying to be long the Qs versus 377 is now losing more money than they planned on risking, right? That's what creates a breakaway gap. Breakaway gaps lead to gap and go situations. So basically what this means is because the NASDAQ is opening at 375, anybody who has bought this market at any point since November is going to be out of the money. And any long traders who wanted to use this 377 area as their stop loss, they are losing more money than they planned to. What do people do when they're losing more money than they planned? Oftentimes they panic. That's what creates a gap and go in the direction of the breakaway gap. That's what creates lower prices. I have to balance, as a trader here, as I'm creating my game plan, I have to balance this thought process of, wow, there's going to be people who are super out of the money, who are going to be panicking out of AMD, going to be panicking out of NVIDIA, going to be panicking out of the NASDAQ because it's gapping past their out. I have to balance that with the fact that we are super oversold here. that our sentiment indicators are coming into the buy zone, that all of our indices are oversold, and particularly the NASDAQ, which has been relatively weak, is becoming very oversold as it gets into 375, let alone if the 375 open causes the market to go even lower, that'll just have us ridiculously extended, right? Look at lows here in the NASDAQ. Lows in the NASDAQ was at 369 with the ADMA at 388, basically. You were $20 extended to the downside of the NASDAQ. Find me the last time we were $20 extended to the downside of the NASDAQ. Somebody, please. I got no idea when that would be. Last time we were $20, just eyeballing back here. Here looks like kind of a bad one. We were lows of 361. Even that is $14.50 extended to the downside. At lows, the Qs today were $20 extended away from the ADMA on the daily chart. So again, bringing this all back together, we're trying to come up with an executable plan for today. It does depend on your time frame. If you got really small time frame, you could be looking for your momentum shorts off the open, like shorting AMD versus 130. Nice little trade here. You could have had $1 risk. You immediately get this move down to 126 off that. You get an absolute low on the day at 125. Nice trade. Big picture though, we were able to snap back above 30. We closed above 130. Anyone who panicked out of AMD below 130 because 130 was their support, their stop, they are out of the way. All of this thing actually creates a dynamic here where it can be much easier for AMD to move higher. So you could be trading both sides. You could be shorting AMD for $1 risk versus 130 on a short time frame if you're flexible enough to do this, and I'll get to that in a second because it's hard to be this flexible of a trader. I struggle with this. You could be shorting momentum trades like AMD right off the open, and then big picture, you could be looking to get long into large degrees of extension and or the recapturing of 130, closing with a $2.25 profit cushion, even if you're only long through 130, let alone if you got better prices than that. And now, as of today, this AMD definitely has the ability to snap back to 137, maybe even 140 if the market's able to cooperate a little bit, and you could be coming in with a decent risk reward depending upon what the intraday risk of your actual entry looked like. So that makes for a really difficult open, right? So this is where the game plan comes from. You could look for your short-term shorts, but if you're a little bit bigger picture, which I usually am, I do day trade, but I also do a ton of swing trading. If you're a little bit bigger picture, just be patient off the open and look for a signal to buy. Look for a signal to actually come in. Again, because the market's extended to the downside, just because it's short-term sentiment indicator says it's a buy, we don't just close our eyes and buy, right? It was extended to the downside at the open. Short-term tactical sentiment indicator probably would have been in the green zone based on the gap itself. If you just closed your eyes and bought the open, you're getting smoked here. 460, you're buying, 463, and the low of the day ends up being 450, 650. Like you're smoked at lows. You can't just blindly do it. You got to wait for a signal. So that's what I was looking for. Now, a lot of the times, if there is panic selling that's caused by people being out of the money, which is what I was looking for here in the NASDAQ and what I was looking for, with an AMD, those types of trades, that heavy panic selling usually lasts for 15 to 30 minutes. It didn't play out this way. It didn't play out this way today. But that's why, I remember, I think the second bar of the day, the NASDAQ tried to give a 5-minute hammer, and I was saying it to the VTF, right here. I was saying to the VTF, I was like, guys, you could try to be long versus this low. I just think it's still too early. And then, of course, it was. This one here, though, with the volume increase, and new lows kind of coming in, and another hammer. This time of the day, though, we're starting to get into the right time of the day. This bar here did fake me out at 9:45. I was like, okay, that could be it. We got 15 minutes of selling here in the Qs, heavy 15 minutes of selling here in the SPYs. SPYs, though, were not confirming what the NASDAQ did on that candle, but the IWM kind of was. IWM also a higher volume. It didn't break new lows. It was showing a little bit of relative strength, but it was holding that low. So I'm like, all right, IWM kind of giving me this signal here. maybe this 15, 20 minutes was enough selling to get those people out of the way. Qs are kind of giving me the signal. SPYs, interestingly, are not, probably because money was coming out of XLE and money was coming out of XLF, because we know that they're very extended to the upside. And I'm like, okay, now is when I think I want to try my longs. And then this is why we have our risk rules in place, and this is why we have that opening low rule in place. If the market tries to create a pivot, so now continuing with the thought process, theory, whatever you want to call it, that panic selling bottoms from gaps usually happen in the first 15 to 30 minutes. If that low comes in and then breaks after that period of time, it actually usually means that you're going to see a lot more selling. So when this low, I'm looking for longs at this time of the day when this candle came in here. In 945, still 950 before this low breaks. I'm like, all right, you know, what's setting up here that I can look for a long? But then, honestly, by 955, all those lows break. So anything that you tried there under the thought process of what I'm talking about, you got stopped out of. And that's fine. This is why we manage our risk. You're not being a bag holder all the way down to lows or even further down. Now you just gotta sit and wait. Maybe if you still have some of those short-term shorts on, you're letting those run, you're trailing them a little bit, you're booking profit on the way down, and that's kind of helping you out a little bit. But if you're having a little bit more of an intermediate time frame focus where you're understanding what extension means and what these indicators and everything mean, then you say to yourself, you know what? The market told me I tried it here. There was a setup here. I went for it. It didn't work. I lost my risk. My risk-reward ratios were great. That's why I took the trade. I had good probability of success. I did all the right things. I got stopped out. Now I got to be patient, and now I got to wait. I got to wait for some sort of new signal to come in or whatever it is. And unfortunately, and this is the second time I feel like in 2 weeks we've seen this. There was one other day last week. It might have been this day. It might have been Tuesday last week before we had the Fed breakdown, where we just had this random like low volume 2 p.m. kind of bottom come in. I think actually the SPYs were earlier. Oh no, SPYs were also 2 o'clock, which didn't really give us a signal. But it's just unfortunate that you didn't really have too much to bite on to here at 9:45 as far as volume confirmation goes. We also know, though, that post 10:30, the 15-minute chart becomes more important than the 5-minute chart. And if you're looking at your 15, which is more about what I was talking about when I was getting off the radio, you're just seeing the degree of extension on the 15 for this time of the day at 10:45 is really getting crazy. And our only signal that we really had, which was called out by myself, Josh was confirming it, Pat was confirming it. The only really signal that we had here was this VXX 15-minute shooting star. Little bit of a volume uptick on it, considering that it's 10:45, so I would argue that there's some volume confirmation here, though it's not perfect. Extension on the 15-minute in the VXX, giving a shooting star. I'm now looking for the market to at least give a 15-minute retracement off that. I can't be convinced that this is a SPY bottom here at 10:45 when I have no volume confirmation. I've got no good, real sexy looking hammer or anything like that coming in that you would want to see. I can't have that type of conviction at this point. I do, though, have a bunch of other things, and that's just execution, though. I can't have conviction and execution is what I should be saying at this point. I do have conviction in the information that I know, which is that, and I think I said this when I was getting off the radio at like 10:40, we were, by this time, 10:40, 10:45, we were massively extended on every time frame except for a 5-minute chart. Daily chart, hourly chart, 15-minute chart, all of them were just showing massive amounts of downside extension. I got lots of things here that are telling me I should really be looking for the long, and all I don't have, though, is like the ideal kind of execution. A little bit there from the VXX that told you could be trying things, and you're recognizing that extension, you're coming in and you're doing it, and obviously that then turns out to be the bottom of the day, and the rally back here was massive. I mean, honestly, massive. For the SPYs, again, I really wish I remember what percentages we were down at the most in the markets today because we were down a lot at one point, but the SPYs are down 0.1% right now. NASDAQ closed green. For this rally to come back in the SPYs, for this rally to come back in the Qs, what's this, a 2.5% up move here from, lows at 1045? That's huge, but that's what we're looking for when the market's this extended. Maybe not all in one day, though we know into down moves, that's when your ranges increase and your volatility increases. It didn't have to be that we got back to, 381 in the Qs by the end of the day today. We could have had a close at 375 today and still had a nice looking hammer that got us back to 381 tomorrow and then got us back to 385 by the end of the week. But instead we had that huge upside move. So that's really the thought process on the market. Now going forward, the market did exactly what I said in the morning meeting, except, like I said, the specifics of the execution at lows was tricky. But this is now a failed breakdown in the Qs. And as someone on the team pointed out, we still broadly are holding this uptrend here. If you're big picture on, you like to play the connect the dot game, which I'm not a huge fan of for like SPYs and Qs. And this candle should be giving us at least some sort of short-term low here. We should really, I would say that there's a 75% probability that we, see a continued snapback to at least the 80 EMA on the daily chart for SPYs and Qs in the next couple of days, which at this point isn't too far away, especially compared to lows. So maybe that's not the craziest call in the world. But I would have said the same thing, I would have said the same thing if the Qs closed at 375 today. Good volume, good increase in volume today, good looking candles. And I didn't even get into the individual names. If you look at like an Amazon today, there's just so many of them. I'll get into individual names here in a second. But I really wanted to break that down over the course of more than just the small amount of time I have in the morning meeting today to talk about big picture game planning, where it comes from. If I can give myself a pat on the back, it's something I like to think that I'm really good at. So we have to all keep our emotions in check as a trader. I don't think it does anybody any good at 10 a.m. to be, yelling into the VTF about why, we aren't more heavily short into this down move after the down move has already happened, when we're becoming extremely oversold on multiple time frames. You got to have the big picture game plan in place. You have to have risk management on every trade that you're putting in. This is why I always emphasize risk management first and foremost. If you're trying SPYs off that second bar of the day, or you're trying, some of these market names off that 9:45 bar of the day today, I think that those are great trades given all of our pieces of probability that I just discussed. But you don't want to be a bag holder when they fail and then the market is points lower, a half hour later, and you're looking at getting a margin call or blowing up your account or something crazy, because an oversold stock and an oversold market can always become more oversold. And this is what all made for a tricky open. This is what made for a tricky open, where you could have looked for, and I said it in the morning meeting, you could look for short-term shorts here on this breakaway gap to the downside in AMD, NVIDIA, NASDAQ. The trade was there. But bigger picture, we have to recognize these other things. And it's the bigger picture. Well, that's the bigger picture information is what created today's daily candle. And I certainly wouldn't want to be the guy who is still short from 459 right now, right? So that's kind of my, I guess, thought process and my spiel on that. Heck of a day today overall for the market, even if the execution wasn't that easy. We can look at some daily candles here. Like this Amazon daily candle is just massive. Look at Snow's daily candle today. Look at this tail snapback off lows. Look at Roblox back off $80, back through lows. Unfortunately, the SoFi versus 13 shook us all out. But some of these spec names broadly gave good-looking candles today. Look at this Palantir candle. As much as I don't like this company, stock's back down to $15 today. Puts in that kind of volume today. Puts in that type of hammer. I mean, there's stocks like this kind of across the board. And if you're bullish on relative strength, if you're bullish on XLE, if you're bullish on XLF, honestly, you wanted these pullbacks to give you buying opportunities, right? Today was a great day to be able to build into some Oxy versus these lows. I didn't like Oxy, versus kind of yesterday's low, unless there was the momentum of it breaking out, just because you still had some extension. But this is an opportunity to start building into some stuff that maybe got too extended that's relatively strong that you want to get into. I actually wish the XLE closed weaker today, because that would still be able to build out a setup. XLE is still expensive. It's still not expensive. Stefan will kill me if I use that word. It's still overbought. Would be the right word here. XLF is still a little bit overbought, not as bad as the XLE. But if you want to be buying relative strength, you want setups. That's why this was so great when we had Wednesday, Thursday price action in XLF that gave us this price time correction that let everybody be able to get back in. You got to build in versus 40 like we discussed on Thursday. You got to buy the breakout on Friday. And everyone is sitting pretty who's just involved in Bank of America, JP Morgan. Ford was a little bit weaker today, but for the most part, people who've been buying relative strength are still sitting pretty, and you're getting that setup to build in. And, if you're looking at trying to buy things that are a little bit more beaten up or oversold to the downside, you got some serious opportunities, I think, to be able to get stock at $80 in Roblox today, which was, Felipe's call out from like a week ago when it was trading at 105 and was a little bit weak. He was like, I'll buy it at 80. Well, bam, there you go. A week later, there's your price. So that's pretty much it, I guess. Pretty much all I wanted to talk about. Not an easy day by any means, by any stretch of the imagination. There was a lot of individual factors that you really had to piece apart to be able to put together of the puzzle. And honestly, that's what I love about markets, though. It's not always easy. It's not always a perfect setup. It's very often that there are just many different pieces of the puzzle that you need to kind of put together to build out for yourself in your brain to be able to execute profitably and be a consistently profitable, successful trader. And we all love when you get the super easy setup that comes in, but we all know that happens much less often than a situation like today. Today is, and I mentioned it, or even this day, right? If you guys remember December 20th here, I was like, this is going to be the day that we look back on as the day where, oh my God, there was just such big opportunity for you if you're able to get stock, right? 5 days later, we're making all-time highs, and we were massively extended to the upside, right? Now we have a failed pattern. From a failed pattern comes a fast move to the downside, and it might end up being a similar situation here, where if you got stock from good prices today, not the easiest buy setup in the world intraday to be able to get it, but that could be the trade that really gives you dividends over the course of the next week and kind of puts it together for you. So that's all I got, and I really hope that helps everyone kind of understand where I'm coming from when I'm trying to put together these kind of bigger picture game plans for us as a team. It's not always easy, but I think that it was really on point today. All right. So, scrolling up in the VTF here, look for questions. Klonovich says, buy the dip. Markets can handle higher yields. Wonder for how long. Oh, yeah, we started chatting about that before the meeting started. I mean, this kind of goes back to my argument of, if you look at 1% interest rates, which would be 4 hikes, 1% Fed funds rate, it's still historically so low and accommodative, right? So, 1% interest rates of a Fed funds rate, whatever the average is of PE multiples, if you want to go back 100 years or something like that, and you go back to the conversation that we had like last week where we talked about how asset classes compete with one another, well, you're still looking at stocks being able to maintain probably higher than your 100-year average of a multiple at a 1% interest rate. So the question, I think, if you want to look at Klonovich's comments today about that said that you should buy the dip because the market can handle higher yields, it's a question of how much higher of a yield can they handle and how much time do we have to see those, or do we ever see those? Because I still think 4 hikes at 0.25% each and we're at 1% It's still super, super accommodative. Now you start telling me if someone has got a crystal ball and they can tell me that inflation gets, stays out of control, and I'm looking at a Fed funds rate of 4% in the next couple of years, okay, then probably that justifies, significantly lower prices for markets, almost period, except for maybe your deepest value names. So that's still kind of my thought process on it, which is why I'm still, to go back to the conversation that we had, I think that might have been one day last week or the week before that, I'm still in the camp of you can look to buy based on technical signals the growth names that are down 75%, and you can look to buy the value stocks that are showing relative strength and belong at higher prices when they give setups as well. And as far as bullish, bearish, neutral, this was the other thing I wanted to talk about. And I guess I should be a little bit careful about that as I say it out loud, talking about buying things that are beaten up and buying things that are strong, because I still got to take my signals from the broad picture of the market, which is neutral. We're in a neutral environment for the S&P, the Qs, and the IWM. And it goes back to, when Pat did his survey of everybody in the VTF one day last week when we were breaking down, he only put bullish, bearish, got to have neutral in there. Because the answer is neutral. And I'll tell you what a neutral environment means. A neutral environment means that when markets are looking bad, that they're probably going to get bid up, and when markets are looking good, that they're probably going to get sold off. And you have to believe that that's going to be the case until the market provides you a new normal. The market provides you a new normal by actually breaking down, and then you go into a bear market where then markets are guilty, and then you want to be looking at them, really be thinking about it with your short glasses on, or until the market proves itself otherwise. So right now, the market is in neutral territory with a bullish candle on the day. So Q's here. They still closed above that 377. They closed above 380. They closed above the entire support range. It's still neutral. So especially when you're dealing with a neutral environment, that's when extremes should especially be bought and sold on both sides. And that's kind of where that is. So I guess I should be a little bit careful, having too much of a bull thesis myself in a neutral market environment. But people also need to be careful about having too much of a bearish thesis when the market's also neutral. Just talking about pure technicals here. Anywho, that is that. Did anyone post the link to the YouTube in here? I don't see it. Whatever. Too late now. What do I think of tick indicators? I don't look at them personally, so I have no feedback for you on that, Chinggis. Tom Lee called the Qs oversold at noon, and they ripped ever since that call. I didn't see that either, but it sounds like it was in conjunction with what Klonovich said. Scrolling through here on the VTF from Jerry. What do I think of Microsoft Inside 5 at 12:55 p.m. today? I don't like that time of day, but I can talk about this pattern in a little bit, which turned into a shooter in front of RDR trigger turned into a shooter in front of the RDR trigger at 3:10:09. Okay. What time did you say? 12:55? It's right here. Yeah, so a good bit in front of it, right? You really needed markets to get above. I think I talked about it at one point in the VTF. You really needed markets to get above the 1125 pivots today to signal something to you, and you can really see it like in a SoFi. This SoFi, which Josh called it out, it's a 5-minute double bottom here. It's a perfect W pattern, and this is the midpoint of it. So you needed to see broadly stocks and markets today, if you're looking at the intraday, get above their 1120 pivots in order to see a rally into the close. And that goes that way with the actual indices also. I know that the indices didn't pull back as deep as some stocks did, but you really needed to see SPYs get above this 460. And look at it struggle with it. But look at the bullish consolidation pattern right in front of that intraday resistance before it broke, right? Just technicals over multiple time frames. But to go back to your Microsoft, yeah, so I don't like inside 5 as something to trade versus at 1 o'clock in the afternoon as a broad rule. I think for the most part, if you're trading inside 5 candles at that time of the day, you're going to end up losing money. It doesn't mean that it's never useful, but you got to be like super selective if you're doing that. The question was, so what I do like though is a bullish consolidation, which is broadly what this is, in front of a key level. And yeah, the key intraday level is also corresponding to the Oldensmith overthrow trade where it gets back above Friday's low type of situation. So that would be my thought process for you. What I like is that you're seeing multiple things here and you're kind of putting it together. I just really struggle with, having serious execution on a 5-minute inside bar without the other information, especially without the other information at that time of the day. Next from then yes, is a decent trade. I did not take it. I hate the time of the day. Yeah, so it's my thought process. You echo my thought process. It's just a garbage time of the day. It's not. There is a trade there though, with all the information that we have. And when markets are especially volatile, you can be more active midday than you want to be when markets are not volatile and it's midday. That's something to keep in mind as well. And when you're dealing with a heavy moving market, big movements and bigger volatility, it's generally a sign that you could be a little bit more active throughout the entirety of your trading session. Next here from Christian. Oh man, yeah, there was a couple of these opening drive trades that were so solid this morning and then ended up failing just because of the market weakness. I know we were looking at AR as one of them. AR above 19 I really liked. I know we were looking at Dell. We were looking at Dell at 59.50 as one that I really liked. I know we were looking at Tilray off of its earnings report versus $7 and or through $7.50. And they were all potentially independently in play from the market, which we also liked because we knew that the market was going to be giving us a difficult open because of Tilray with its earnings reports and AR and Dell with their upgrades. So love that you're looking at AR here off the open. $19 is what I think you want the trigger to be. Let me read the rest of your question and we can kind of analyze this as a team. So with the break of the inside 5 at 9:43. 9:43. So it should mean that the so you're looking at, so the second bar of the day was that. Okay, I see it. So you're buying up here at $9.38. I'll tell you why it's a tough trade, but I'll tell you why I also don't hate it in a second here. I did not notice that the ADMA had not caught up with either the low of the day or the low of the inside candle. In hindsight, I am thinking I should have not taken the trade, or I should have given it to the low of the day instead of the low of the inside bar. Could you help me with my thought process in a situation like this one? Sure. The first thing I would say to you is that, I guess it was a little tricky because it opened above 19 and then it traded below it. I would like for you to somehow be long at a better price based on the daily level. The daily level is 19. Now, with that said, it looks like it made it really difficult to be long like right off the open. Maybe if you're paying attention to it, when you say a trade through this 19, you're buying it on the way back up through 19 versus lows. That would have been like the best possible execution on the trade. Now, again, not necessarily easy because it opened above, traded below, came back up. So not easy execution there. So if you miss it and it's looking really good, it looks like there's momentum and there's news in the daily chart and you're expecting, even though the market is weak at 9:45, that's when we were starting to expect that maybe the market could bounce and it's the most relatively strong stock that's out there. So you're looking for an intraday setup to try to get long. Well, this is a momentum trade. This is a momentum setup, what you're describing. A momentum bar followed by a rest candle. When that breaks up, you're looking for a momentum long. So you could try it. I struggle personally, that it's a $19 stock and you're buying 37 cents above the daily level in a $19 stock. You're buying 2% above the break of the daily level on a $19 stock. That's something that I would struggle with personally. That would, I know, limit me from getting in this trade if it was my trade. It's a big pay up that you're doing here, and you're relying on momentum to pay you. Now, given that you're relying on momentum to pay you, so you got a couple options here. You could just use the low of the inside 5, or you could use the low of the day. The problem with using the low of the inside 5 is that the ADMA didn't catch up and you could get shaken out of the trade. But it's a momentum trade. So on a momentum trade, you technically don't need the ADMA to have caught up. You want this thing to be given so much follow through that it's able to catch up very easily. So I don't dislike the use of your stop loss at all. Not using the low of the day, using the low of the inside 5. You just have to recognize the type of trade that you're involved in. The type of trade that you're involved in is a momentum trade. You have reasons to believe in momentum here. So I like your trade. I really do. The only thing, again, that I struggle with personally, which I know personally, and I'm not necessarily saying this is the right thing, I know personally I would have struggled to get in this because I would just be looking at my price that I'm buying, $9.37, $9.38, and be like, man, $19 was really the breakout. I kind of want a price closer to $19. Now I'm paying up 2% in a $19 stock. I'm paying up, 40 cents on an $18 stock off the daily level that I really wanted to be in versus to begin with, which probably would then have me having a thought process of not getting involved in it at all. And I know that I also personally, and again, I'm talking to you personally. I'm not necessarily saying right or wrong. I know personally that I struggle with pure momentum trades where the ADMA hasn't caught up to my stop loss. I struggle to take them. So I'd be looking at this thing saying to myself, wow, I'm paying up 2% off the price that I really wanted to actually buy, and I'm doing it in a momentum trade where the ADMA hasn't caught up. Those are two things that I struggle to execute a trade on. And doesn't mean that it can't still work. I sometimes miss stocks that I really want to be in that turn out to be beautiful trades and think trends up all day. I sometimes miss it because I don't want to be buying the later trade after a move already occurred that's going to be a momentum trade where the ADMA hasn't caught up. So again, I'm not necessarily saying that my thought process is right or wrong. I'm just telling you about the things that I would struggle with if this is my trade. But look at this thing. It closed at $19.30 today. Closed above $19. You probably only got pushed out because of the weakness in the market as a broader situation. Even though this thing was upgraded, it doesn't make its correlation to the market zero. And markets were super weak and breaking down very heavily at the time in which you got stopped out. So there's a real chance here that if you're looking at a different market environment where we just had a stronger, broader market environment, that you're taking your trade there at $19.38, and this thing is closing at $20.30 at the end of the day, and you have a phenomenal trade on your hands. That easily could have happened if the market was cooperating. It just wasn't. So that's my thought process on the trade. I don't dislike it. There's just a couple of things that I struggle with about it. So I hope that helps. Intel mooning. Intel to the moon here. Intel up 7.5%. Holy guacamole. Next here from Justin. It was very hard to trust the intraday bottom because it was more of a sideways type of bottom. Yeah, we kind of rounded up on no volume. And rounded reversals, and it's even a struggle to call today's low rounded reversal. Rounded reversals, I think, are the hardest one to trade, to actually execute on, because there's no signal. You don't get that sweet capitulatory signal that we're all looking for. It was more of a sideways type bottom, like a base type bottom, a rounded bottom, than a vertical bottom that is easier to find and trade. What are your tips and thoughts on what to do when a bottom like this could be forming for future reference? Yeah, that's what I tried to talk about that in the afternoon meeting, on my portion of the afternoon meeting, as much as I could. That was the biggest difficulty about today, without a doubt, was just the way in which the bottom formed. It's a weird time. It's 10:45. Look at the volume on the candle low of the day. There's nothing special happening. We had elevated volume broadly. That makes sense given how weak the market was. Very, very hard. Very, very hard, Justin. I don't have good advice for you on this, honestly. There was no signal here that said to me, buy the SPYs. I did see a signal that said to me, short the VXX, which you can push out to buying the SPYs off weakness in the VIX, right? And it was here. It was literally at highs. You know, I time-stamped myself at 10:52 a.m. today, telling everybody to look for a short in the VXX, and that happens to be the high of the day because of everything I'm talking about, the extension, but also the 15-minute chart. It's really the 15-minute chart at that time of the day, starting to potentially, it hadn't closed yet, starting to potentially form a shooting star and extended territory on the VXX with all of the other stuff that we know big picture. So I really think that the only way, honestly, that you could have bought like SPYs or Qs at lows today is if you were basically trading SPYs and Qs off the VIX. And the VIX did give us that signal. But that was it. And even, you know, yeah, the volume was okay on the VXX here at highs. That was like the only signal. Not easy at all, Justin, unfortunately. Not easy at all. But then we had the lower high come in the VIX, and we had the higher low come into the SPYs. You also could have been trying to buy the market on the break of this 460. Again, now you're running into time of day issues. You don't have the extension on your side anymore. But this is a confirmation of a short-term reversal. And we still know, even at 460, how extended the market is to the downside, or especially if you want to look at Qs. You know, Qs you could have bought, and this is a different type of pattern. You don't see me talk about this as much intraday, and you guys know I do the majority of my trading off the open. But you could have bought the Qs on the break of this high. That's when you're confirming a reversal. If you guys remember when we analyzed Rivian last week, the capitulation bottom in Rivian, which is not what the market did at all today. One thing that we did as a team was I said, where is the reversal confirmed? Well, you could have been trying to buy the market as the reversal was confirmed. I also don't think that's easy. You're buying right into the 21 EMA on a 15-minute chart now by that time frame. But the reversal is confirmed at 115 here for the Qs, and you know the big picture degree of extension, and it's confirmed at 115 also for the SPYs. And we had that wackadoo bull flow, those lotto options come in that were SPY calls for 464 that expired today. Man, that trade was money. And I think I said it to Pat. It was off the radio, but Pat's behind me. I was like, Pat, I wouldn't be surprised if those things close in the money today. And it happened. So, hope that helps you, Justin. Chernej asking about CCJ. This candle just stinks on this CCJ from the January 6th. I was trading the UUUU, which is also uranium play, on the 5th, but it didn't close right. It gave that shooting star, and then the January 6th daily candle, I think, broke both those stocks. Now, there is an okay looking inside day today for CCJ, but the chart overall is a little bit sloppy in the consolidation. I don't dislike it because I kind of like the play. I like the uranium play. So maybe you could try buying CCJ tomorrow above today's high as a trade versus today's low because of that. But otherwise, it's a bit sloppy. And you're asking about TRHC as well. I have no idea what this stock is. The volume's a little low for me. I don't really like trading stocks that trade an average volume of under 500,000 shares in a day. It doesn't mean I don't do it. But the volume here is a little bit low for me. I don't know anything about this company, Tabula Rasa Healthcare. I know nothing about it, so I can't give you any opinion on that. The only thing I can tell you is technically $16 is really important for the stock to get above. So you could try to look to buy a break of $16 if you're getting volume confirmation in it. So maybe it's worth it to have an alert out for that price. While it's below 16, it's hard to own this thing. Ricky letting me know that the SPY was down 2.04% at lows. Thank you for that information, Ricky. That's a huge turnaround in the SPYs, and the Q turnaround was even bigger. Where Qs might have been down 3% at one point today. Steve asking me for thoughts on SE. This is another one. There's so many of these stocks, guys. Do your own chart work tonight. There's so many of these stocks that gave these really amazing candles today, like this SE. You could try to be long off this low. I think that's difficult to execute because of how much space there is. I'm not trying to come in and risk $20 here, but I think that these candles and a lot of these charts are telling us that we should be seeing at least a short-term low and seeing some sort of bounce off of it. And it's interesting because, we're talking about spec stocks and growth stocks. They gave a capitulatory signal for the first time on Thursday. Really for the first time on Thursday. And, a capitulatory signal usually just means a retracement, right? Not necessarily a reversal. And a lot of times it's not an absolute low. We always like it to be an absolute low because it's easier to trade. But like this price action that we're seeing right now, where some of them tried to put in like that capitulatory low on Thursday, it's showing you now that buyers are present at these levels, but they broke that, so they shook people out even more, got people even more disgusted with it, and now gave almost like even better looking candles today. I think we can have some of these things on the radar. I think we could be looking at DKNG as an example here, as potentially even given its first higher low, though it still has to confirm a break of the descending channel and confirm a reversal. There's no confirmation of a reversal. I think that this price action, like a DKNG, which is one of the names that capitulated as well on Thursday, stock's at $24 at this point, followed by like a, I can't call it a continuation hammer. I don't really have a name for this type of candle that I put in today, but it's like almost a higher or low type of candle. We just need it to break actually up. So those things are interesting to me. For Mr. Trees, Mr. Trees, why did you think there would be a possible small short at the open instead of a bounce? I guess my question is more about gap analysis. Yeah, so just to kind of review it. So today was a breakaway gap to the downside in the NASDAQ, not confirmed by the SPYs or the IWM, but it was a breakaway gap to the downside of the NASDAQ. It was a breakaway gap to the downside in AMD. It was a breakaway gap to the downside in NVIDIA. A breakaway gap is a gap where the market gaps above resistance or below support. And what a breakaway gap does, so we know most gaps tend to get filled. Breakaway gaps are the one type of gap that tend to not get filled. Today's did because of the extension and the other stuff that we were talking about. But the reason why breakaway gaps tend to not get filled and lead to gap and go situations was in play off the open, which is basically, you got to understand the positioning of market participants, right? Anyone who has been long the Qs versus the 377 to 380 area, anybody who's been long the Qs just in general at any point over the course of the last couple of months, anybody who's been long AMD versus 130 support or just long in general over the course of the last couple of months, anybody who's long NVIDIA off 270 or just long in general over the course of the last couple of months, they're all out of the money when the market opens. What do market participants do when they're losing money? They do one of two things. They either manage their risk and get stopped out. That's probably the smart one. Or they pray. They go to church. Dear God, whatever God you believe in, please, I'm so sorry that I didn't manage my risk. Bail me out on this one. Make my stocks go up for me, please. Don't do that one. It doesn't work. do the first one. Manage your risk. But those people who are all trapped, they're selling. They're either selling because they're managing risk, or for some of them, they're being forced to sell because their account is getting liquidated and blowing up and having margin calls and whatever because they're now down so much money. So that is why breakaway gaps tend to lead to gap and go type moves. So that was the whole balance of today. Balancing a breakaway gap with these people who are out of the money, who might have to panic out of a position, versus the degree of downside extension. I wouldn't have been surprised either if we just got bought up immediately off the open, but today's price action makes a lot of sense, and that's why I said you could look for short-term shorts off the open, like shorting AMD versus 130 as a short-term trade if your time frame is right. So hope that helps you. Next here from Ernest. With short-term shorts versus short-term longs and long-term longs, etc., as a trader, how do you view the markets in terms of execution and risk management on oversold scenarios, please and thank you? Yeah, sure. So the first thing you got to be asking yourself is kind of what are your goals and what type of trader are you, right? Are you a pure only day trader and you don't keep positions overnight? We've got people like that on the team. I'm not one of them. but are you a pure short-term day trader only, or are you someone who likes to look for a little bit bigger rewards, a little bit bigger time frames, and likes to hold positions when they're in win-win situations, kind of in your favor for bigger reward? And I do both, but the truth is, the longer I've been in this business, the longer my time frame has gotten as well. I'll still take those short-term trades. Felipe on the team is fantastic at them. Pat has been crushing the day trading game recently. I know that as a fact. So, you got to analyze yourself, what you are, what type of trades are you looking for. And it's very hard to be both, I think. It's not impossible to be both. It's just very hard because the type of mental flexibility that you have to have in terms of not having biases and things like that, to be able to think to myself, I can make money short off the open, but big picture here, I want to be long, I want to be looking for longs, and I want to pair out of those positions and build into long positions, is so hard. I'm not good enough to be able to do that. Every once in a while, I can pull it off, and I do like something really awesome. But I'm happy to admit to you guys that I am not yet. I'm still improving as a trader. I'm still getting better. But I'm not yet good enough, really, to be consistently mentally flexible enough to be able to kind of capture both sides of the action that we saw today, where I could be making that short-term short money and then be coming in and looking at that bigger picture long money. So that's why I was a little bit more focused on the latter today. But in the morning meeting, we kind of did discuss both. So then it depends on, that answer then depends on how you execute. And execution is then key, and you have to have the setup and the risk reward has to make sense. I think risking $1 or less in AMD with the way that this thing moves is $130 stock makes sense. I think you can do that. I think it's appropriate risk for this name. AMD, is a breakaway gap to the downside versus 130. So as an execution perspective, you're shorting off the open versus 130. That's just how that trade would work. And then the bigger picture setup is like I'm talking about. It's like, look, you could have bought AMD at 1:30 today at 2:20 p.m., 2:15 p.m. if you have a longer time horizon. You could have bought NVIDIA at 2:70 today, almost into the close, if you have a longer time horizon. What I really, but that more means you're trading daily charts exclusively. What I like to do, because I find it gives the best risk reward, is try to find small time frame execution that goes in the direction of the big time frame. Meaning, if I think, based on all the stuff that we discussed, that, and again, here we go back into our if-then statements, if I think that NVIDIA can close above 270, that AMD can close above 130, if I think that, because I'm looking at that time frame, sure, you could be buying 270 and 130. I prefer to try to find the small time frame execution that's at 260 in NVIDIA, or to find the small time frame execution that's at, off 125 in AMD. And sometimes we are able to do that very successfully. And when you're able to do that, and today was harder, without a doubt. It's what we discussed already in our meeting. It was harder. Sometimes it's easier. When you're able to do that, that's when, from my experience, that's how you make big money in trading. And that's how you get big risk rewards. Is having the small time frame execution risk with the big time frame reward when the thought process plays out. So it's unfortunate that we couldn't get like a perfect setup at lows on small time frames for our indices today. We discussed that VXX was really the only signal, because there was no signal for SPYs or Qs or these individual stocks too much at their lows. So again, not always easy, and sometimes it's not easy to end up with worse pricing. Maybe you're trying to do that, it doesn't give you the signal, so you end up being in smaller at 130 in AMD when it actually breaks. And then, the problem is that your stop loss still has to be all the way down to that 125. But is it bad? Is it a bad trade? No. If you're long 130 with $5 worth of risk, you have a greater than 50% probability of a move to 138. So you're looking at $8 worth of reward on $5 worth of risk with a probability that's better than 50%. So that's going to make you money in the long run. So it's a trade that you can take. So I hope that kind of helps you there, Ernest. From Sebastian, you think buying now with overnight risk is worth it in order to have good entries for tomorrow? I guess the probability of a gap of tomorrow is pretty high. We'll see. We'll see on the gap tomorrow. I would normally say yes, but I almost feel like we just rallied so much intraday. If we closed at 375 in the Qs today, 376, I'd be like, all right, we're probably, today's candle is probably meaning that we're going to gap up above the resistance tomorrow. But just the fact that we rallied so much is tougher. But it goes back to like what I was just kind of saying when I was analyzing AMD there for Ernest, risk reward. Does it make sense though? So NASDAQ here Qs, I think, are telling us that we have a better than 50% probability of getting a move to the ADMA, but the ADMA is at 387. So now you're buying 380.50. You're looking at $6.50 worth of reward. Technically, if you're buying here, you got to give it to lows. You're going to risk $11 to make $7 or whatever with a greater than 50% probability of success. That's not going to give you consistent profitability in the long run. It's a little bit too late. At this point, if you want longs, you should hope for a decent gap down tomorrow, which could happen. We'll see. B. Henry thanking me for the meeting today. No problem. No problem. Happy to help out. From Tian Hao, for the momentum trade like AR, if you set the stop at the opening low, then how do you determine the technical entry price? Also, does the momentum trade only work for time before noon when liquidity is high? Yeah, so momentum trades are always best in the beginning of the day, unless there's a new news event that happened in the middle of the day. Outside of that, momentum trades are always going to be better in the day. So that's the easier question to answer. Second question was on stop losses. So it depends on your execution. If you executed the way, oh man, I already forgot who originally asked about the AR question. It might have been Christian. If you executed the way he described by buying the break of the inside bar, you could use either stop as the out. The inside bar low is the momentum out. The low of the day here is the idea is wrong out, right? So it's up to you which one you want to utilize. So that's one execution, would just be actually buying the break of the inside 5. The other one is a little bit trickier here because the opening price action is tricky. What I would like to be able to do is either have the stock open below $19 and then buy it through 19 versus the opening low, or have the stock open above $19 and buy it as soon as it opens versus $19. Neither of that would have worked today. One, because it doesn't open below, and two, if you bought it above versus 19, you get stopped out. So the only opening execution you could have done, which is a much more difficult trade, is believe in the $19 level, let it put the low in, and then trade it back through 19 versus lows. Very difficult to do. If you were able to do it, it's a phenomenal risk. You're risking 6 cents in it. It's great, for what the thing's able to do here, but not easy. From Ben P. I love that the team is getting so solid now that we got traders that got to add initials onto their names because we've got just multiple Bens and multiple Aarons, and do we have multiple Patricks? Patrick, I don't think so, right? Not yet. MasterCard anyway. Look at the range on that candle in MasterCard. Just insane. Yeah, I don't love the positioning. It's technically a continuation hammer though, because it's still closed above its levels and above the moving averages with that crazy tail. Hard to be long versus that low though. But yeah, if you're broadly bullish MasterCard or you're in it somehow, it's a decent close. It looks okay. From Trade 117, last question of the day here. It's late. Any advice on calculating position size intraday when markets are moving fast? So a general rule is as markets are moving fast, when there's more volatility, you're going to take lower tier size for the same dollar risk. But the position sizing is always you back into your position sizing math, right? Position sizing is based on space risk. We even had one SPY trade that I called out today, which eventually failed. It was big enough of a move to get risk covered, of buying SPYs back through 460. I think it was 10 cents or 18 cents worth of risk on the SPY back through 460. It was enough to, get your risk covered of a bounce there. It could have been an awesome trade if that bar closed well. Could have been like if that trade would have worked, man, on that 10, 18 cents risk in SPYs, it would have been phenomenal risk reward, right? Imagine if we closed where we closed, but that was the bottom of the day, and it easily could have been. The timing of the day was perfect. We're breaking a whole round number. The market loves to do that and then come back up. Would have been so nice. But again, it gave big enough of a move to manage risk and then get stopped out. What you got to be doing here is choosing your tier size based on risk. So the cents risk that you're putting on is gonna, by the amount of dollars that you want to risk, determines your tier size. So simple examples: you want to risk $100. You want to risk $100 on a trade. If it's 10 cents risk, you take 1,000 shares. If it's 25 cents risk, you take 400 shares. If it's 50 cents risk, you take 200 shares. That's your math on how you're coming up with your tier size. All right, gang, it is 5:20, so we had a good long afternoon meeting today, but there was a lot to discuss, lot to learn. We're all learning. Heck of a day today, huge ranges, really interesting daily candles. Today, you guys definitely want to do your homework, right? Do your journaling, do your statistics, do your chart work here after hours, really review this type of price action. That's how you're going to get better as a trader in the long run. I will see everybody tomorrow.